Hi, Stephen Koukoulas here, Zagga's Economist in residence with the monthly review and update on things. And yeah, it's been an interesting one. The economic data on the economy has confirmed that the slowdown is well and truly with us. Inflation is continuing to be well under control and heading back to the RBA's target. And because of that, the Reserve Bank have indicated that they're no longer biased towards hiking interest rates. And at this stage, to use the words of the Governor, Michelle Bullock, she's not ruling anything in or out, which means that they've got a view that if the economy is weak enough, inflation's low enough, then a rate cut will be on their agenda sometime soon. And that's certainly what the money markets are pricing in right now. But in terms of some of the data on the economy, we know that issues like retail sales are weak, building approvals are tending to be down. So that construction cycle, which looked a little more promising a few months ago, is just petering out. Obviously, we want to see some construction activity coming through, particularly in the dwelling space. We also know that job vacancies are trending lower. We had a quirky number on the labour force number, which a lot of people have discounted because of the way the Bureau of Statistics are calculating that number. Remember, we had an unemployment rate going from 4.1% to 3.7% in 1 month. Let's wait and see the next few months of data before we be sure which way that's going. But every other indicator, and why that stands out as probably wrong, is pointing to economic weakness coming through. And that's why I think, as I mentioned, that the RBA is inclined to be trimming interest rates in the months ahead, not putting them up. And just on that score, if we look at the money market futures, we've effectively got 25 basis point rate cuts priced in from about the middle of this year through to the middle second half of 2025. Looks about right. There's probably some downside risk if the economy is weaker. Now, the other thing that's happening is that house prices, there's a really big divergence going on from city to city. Melbourne and Sydney and Hobart are weak. Prices are broadly flat. They're increasing a small amount, but basically recording very little change over the last few months. Perth, on the other hand, is growing at about 1.5% per month, 20% over the past year. Adelaide's not too far behind. Brisbane's not too far behind that, with really strong double-digit annual growth in those other cities. So a real patchwork and difference of trend from city to city. I think those trends are going to continue, partly because just the absolute price of houses, Sydney, for example, relative to Perth and Adelaide. But I think at some stage we will be getting a bit of a cooling of house price activity as the economy continues to weaken, as we get some softening in the labour market numbers, which I still think is going to be happening. And maybe there'll be some interesting sort of house price dynamics when we finally get the RBA actually cutting interest rates and not just speculating about them. So a lot to digest. Looking forward to the next review for Zagga in early May. But until then, keep enjoying the economy. I hope it's doing okay for you.